Hello and welcome. Today's date comes in that of Tuesday, June 30th, 2020. My name is Derek and this is the Money Charts channel where, like always, all bets, trades, and of the like, well, that is within each's own risk and their own reward. There used to be a show as a kid that I watched. And I'm a little kid. I kind of couldn't understand why my mom didn't like it. It was called Sesame Street, and well, it didn't take me too many years after that to figure that part out. Oh, I couldn't watch that today. But they had like words of the day and numbers of the day. Well, today's word of the day is excitation. And that's a word I made up about a year or so ago. And I like to use it for like things like technical terms here. Leaving the 18 average, that's what the attempt here is, excitation of the 18, excitation of this neutrality. At least that's what the setup is. It still has to get above this established resistance on June the 1st. This is silver. And at $18.38, currently at the 22, at least using this exchange. I mean, there's different prices. That of the, well, this, let me just click on this here. I'll show you what I mean. Because I haven't even looked at the differential for it today. Yeah, 18.21 versus 18.48. So a 27-cent differential, 1.5%. And then, of course, what you buy it at when you actually buy the physical commodity. And excitation, again, I'm going to use a different term as far as the one thing that I've been doing a lot in the previous decade is excitation or anything. Excitation of any of my funds that I do not control. If you do not own it, you do not hold it, you don't own it. When you're in a situation where you don't hold it, can you hold it? Like, for example, maybe you got a LITECOIN on Binance. You don't own it. But if you withdraw it to your wallet that you have the private keys, well, now all of a sudden you do. Fiat. And if the people knew, the people masses, of course, that the currency you put in your bank is no longer yours on a bank deposit. You are a creditor now, and you are loaning them that cash. That's part of the whole that you don't own it. Well, excitation might be a relatively good idea. Anyway, that's just another way I wanted to bring up that word. So I'm really liking how the daily chart is doing. It's been doing it since the start of the morning, 8 o'clock, 9 o'clock, as we had excitation here, breaking the short-term established resistance first at about the 1790-ish or so area. And then we had, on the 24th, we had this high here at, we'll call it 1806. Well, we've gotten above that. And when you have a situation like this and you see, I'll say that word again, the excitation from the 18, you're pretty much right at that resistance area. And anyway, you expect to break it. It has done that. On the 15-minute term, it's just been continuously so far today's session going up very nicely. So let me take a look at the other one for the longer term analyses. We can see I got a Fibonacci line that's approaching here. It's just, it might have just been previous resistance. I don't know what the line was. I know it's at the area now, but same thing here. It's the resistance that we've been facing on many times that is just, it's most likely got a good chance of breaking it. And weekly chart, this would be an extreme nice pattern if it does such. And well, we can see it was just trading within this range for quite some time. And I think this is what the lines represent. And it's either Fibonacci or it's those key lines. Either way, it's just big resistance that's been hit for quite some time. And if we can get excitation on this time frame, oh baby, it's gonna be sharp. The moves. It's interesting how it'll be. I think it'll be big. But anyway, we resist it last year in September and stay within that area, but a little bit of fall in November, but it didn't take a little, stayed there for a bit, but right back to that level at the start of the year in January, and then right before the Rudy Gobert fall, it resisted it for like a fourth time, and a big kerplunk, but a big reversal of amazing V-shaped formation right back to previous high, and twice back to previous high, because now it's the second time as the first time and back. So to me, it looks like it's got a very big shot of taking it out. And if we get a breakout here on the monthly time frame, and what a beautiful month this is. And this is the last day of the month too. Beautiful setup in here. To me, I think the probabilities July, August, September could be magnificent if we get excitation here on these longer term time frames. Let's transition this. No, let's not transition to gold. Let's do the long. A lot of people like the cup and handle formation anyway. So let's just Bring that into perspective. 1980, we hit a high near 50 US dollars. From what I've seen, we had some prices that did get to that number. I've seen 50 and a half, I think 52 and a half for some numbers. Either way, the general area 50. And of course, all of the printed currency. Now, when governments do such, banks will say, banks create currency. Where does it get its value from? Because it has no value to start. It's just printing numbers on a computer. It's not even these paper rectangles or such like that. It's the value comes from currency already in existence, because thus they share the exact same fungibility in that they're the same thing. And then, of course, when they create more, that reduces the value, thus inflation, and as it goes. So the fact that it was 50 here and 50 then again, it's like, okay, this is almost like, okay, inflation adjusted, we're like down here. And then inflation adjusted, we're even a little bit lower from here. So, and I was a time back in here where I would make inflation adjusted charts, and it'd be a decent amount of work, but you get the idea that we are way, 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 way behind this on a level like this, or that to me, silver is very, very cheap. And as this quarter comes to an end, this will be it for here as far as this one. And to have a recovery cover like this pattern in itself, if you're going to draw a textbook of you're still in a sideways range, when is there a spot where it looks like it's got to be great to break it one way or another? And I think it's just to the upside. It's been in this sideways range since the last 6 or so years. But we come up to this point in this candle here, and then has this last 3 or so have come out to me. This looks phenomenally set for a great breakout. Gold has an amazing excitation on the daily chart. Let's take a look at that. It's got a price differential here of these two in here. 1783 to 1802. That's 17 plus 2. That's about well over 1%. And the gold silver ratio, a little under 100. We'll show that at the end of the gold analysis. I'll get to the quarterly chart in this in a bit, but this is pretty big to me. We already had a little, this is almost like second part of the excitation on this particular move. For the, I guess you could say the attempt, the statement for it, was the combination of June 19th and June 22nd. And more concisely, even on the 24th, when it got above this level of resistance it established May 18th. But it did get above the shorter term 1744-ish area here on the 22nd. But what it did after hitting June 24th highs, it spent a couple days going sideways. It came back down to the 18 average of highs. It came as if it was that much higher, but it had a little bit of a pullback, but just that was all it needed. And gold's had a lot of that, both long-term or intermediate term and, long-term, intermediate term, and short-term, where it doesn't give that much back. But it did come back down to the highs, and then we had a pause day on, that doesn't count. This little candle's like the Sunday open, so it's not even really counting. But no, that does count. That was Monday. Yeah, that was Monday. So Monday was a nothing day. It was a pause day, yeah. And then that's stronger than, yeah. So pause day doing that. Then we're having that breakout, getting above this significant level of resistance. We take a look at this on the short term. That was that resistance here. Even this little bit, exiting out, excitation from that point. And even short term, just the hourly, we can see, okay, previous period, it got above it. It pulled back at least close to it, because we see it pulled back to the 1781. And then it did pull back to the line on the next one. So it did come back to where it came from already. We can see short term. We can see also short term that it broke the previous high within this hour, 24 minutes to go, 36 minutes in so far. And that we've already been closed above last one. We're pretty much at the previous high. That's a very strong setup. 15-minute term time frame. We can see the last two periods have just been pausing what's been really 3 fantastic up moves from the 2 before then, or the 2 then the pause. If we look at this on the 1-minute time frame, let's just cut to the chase. And I haven't looked at this yet. This is that coming back to where we did the exiting out of the previous high at 10:45, and then having an okay move up to this previous level of resistance, and exactly to the previous level, and then lifting off concisely. Now we have retracement mode from this high to this low. So 61.8% where we are now on the way up was this point. got to previous high, consolidated a bit, and then barely broke out. But since we've gotten here at 11:05, right now it's 11:36, so for a half hour, it has supported, congested at this previous area. Just a lot of great signs for gold at this point. Let's take a look at this more long term because, and I've been showing a lot of it. I just love how a lot of it is set up. And I guess this is a better, much different 1 minute. I guess this is delayed. This has got to be delayed. 11:27. It's a little bit delayed. I was gonna say it doesn't make any sense. And there's the D right there. Okay. Well, can I bet on this? So yeah, probably not. On the weekly chart, and I mean the whole. If you go for excitation of this, I mean this has been just in a non-stop uptrend for quite some time. That you could say. The last time we had any type of downtrend in here on the weekly was back here. So excitation of the 18 would have been the attempt, would have been here, the statement. And that was way back on the end of last year in December. And it wasn't that much of a downtrend, although it was for its time on April 23rd to August, it was consistently down on the weekly. I mean, the only green candles it had, 0.1% here, and then at the bottom. So it was like every week there was. I mean, this one here, but that's just weird. These two, and then we can see from that point on, it has been nothing but productive. It resisted previous high, and then when it broke this high, concise move. And the excitation on this one, the attempt came here, and then when you've seen it was clearly above, that gives you indication we're probably going to do well. Well, look how well it's been doing. Since that, it got the clear break. It was overextended above the 18 highs. All Bollinger Bands would have said is extended as well. And then there's your correctionary phase nicely within the 18 and excitation. And I'm not going to say that word too much in future videos. It's just one of those dumb Sesame Street chart topic videos. But with that being said, it did so on December the 30th. Very big, vile correctionary moves on the Rudy Gobert lows. But this pattern right now in the weekly, what a setup moving forward here for gold. It is so fantastic. I mean, the candles don't look so good. Maybe I can just go back and forth. This one would probably look a little bit better. I mean, I know I got a little lines in there, but the setup in here just looks fantastic that this is going to keep going. Silver looks bullish. Gold looks bullish. I would think the gold to silver ratio should go down if they both go up. I mean, unless gold just has like monster 3 or 4% days or something like that, which could come into play, or it corrects its moves sideways where gold goes down. But other than that, or silver goes down rather, probably if they both go up, silver will have better days. No guarantee on that, of course. Monthly chart, it has been it's overextended, and the last time it had any type of correctionary move was 3 periods ago, where during the Rudy Gobert lows, it came down. So it's barely overextended at that. This thing has full potential to keep going. In fact, its play is to previous resistance, and it's there, and it's hasn't even went to full level, which is 1920, previous high back in 2011 at the end of that year. Because it's in that general ballpark area. Because when we were back in here, okay, big resistance at 1380, okay. Then we come up and we resist previous support, because there was support from that time in 2011 and 12. And that congestion area, August all the way to the end of the year, so the last quarter of last year, last third, was congesting, resisting previous support. And then excitation of that occurred, there's that word again, at the start of the year, and it's been nothing but productive. So the next level it's going to is previous resistance, and that's what it's done. It's hit this resistance right now, we're at this resistance, not quite the ultimate high one, so it's still in that process. Breaking that resistance is uncharted territories on a nominal level. Keyword nominal level because, well, quite frankly, when we get to, well, this high was 1923, it says. When we get to 2000, it'll still be lower than that. Inflation adjusted, only by a bit, but still lower than it. And even by a decent bit, given how much was created just this year. Of course, the fiat currency, you don't hold it, you don't own it. See, with gold and silver, I own my gold and silver, and you can do that. When you hold cash, yeah, sometimes with the new current situation, they only want to accept the paper, the plastic cards If that's the case, that's the case. I believe, I guess, in today's times, you need to have some in your possession that you own, and some accounts receivables. Give the give the bank your currency on loan. And it'd be really nice for me to see for politics. I'm waiting for a politician, whichever country, in the United States, to talk about September 11th on like architects, engineers got good points here and there, but only American leaders for that because it's their subject. But for every other leader as well, how about technological unemployment? That's an issue we really need to be having plans to how to conquer that issue. And I don't know. I mean, that's a tough one, but I think I think leaders should know generally how masses are thinking in one way or another. And that I don't think most people realize. I know most people realize that when they don't, but the hold it, own it, and then banks, that it is a loan. So it would be good for these leaders to come out. See, if I was running for prime minister, president, I wouldn't even need to win. I would make sure that in my when you're trying to run and you're doing all your rallies, that's the word I was looking for. I would explain to them then about currency, because people need to know that stuff. And yeah, I know they'll cause a whole bunch of wacky stuff and bail-ins. $100,000. I think that's what it is, the FDIC. So say you got like $400,000 in the bank. Yeah, we can't give you anything right now. Oh, why? Yeah, well, because this is going on. So, yeah, normally we would allow you your accounts receivable to be paid when you ask on demand. But today and this week we can't. Oh, that type of stuff can come through. He. Those are just funny words that we used to say, like he on chats. But you laugh about it because you know about it, if you think. With that being said, oh, okay, well, we're insured for $100,000, but yeah, right now the other stuff, yeah, it's gone. Bye-bye. Yeah. And then the South Park did a thing. Yep. And it's gone. That could easily happen. When you have cryptocurrencies on Binance or on Coinbase or some other place like that, you do not own those Bitcoin or Litecoin or whichever coin is, they own it. Yeah, you can push a few buttons, make a phone call maybe and get it. Yeah, sure. And then when you do that, again, I could have a Litecoin on Binance, do a withdrawal, send it to my private wallet, and then now it's mine. And that's why when I like to trade cryptos on the market, I like to hold those cryptos on my own wallet, deposit them, sell it, buy what I need to buy, and then withdraw that to my wallet. So anyway, that's the chart in here, and the excitation on this above this previous resistance is going to be, I think, fantastic. Let's finish it off within the ratio. 97.9, basically in that 100 area. I guess I can get more data by this one first if I'm doing long term. Not much more, but yeah, you can get like there's the old 16-to-1 ratio right there. Yeah, I think we're going back down there, and I think we're going lower. But in time, this thing could, I don't know, maybe before we do, it still might have the potential to go way up. It all depends on how when the next full blown move comes in. We could have a spot here where silver doubles and gold goes up 25-30%, and this goes way down. And then maybe a spot where gold breaks that resistance, has a 40% move over X period of time, and silver's up 15%, and this goes way up. And then the correctionary moves can always happen anytime too. Okay, gold goes down 15%, silver's down 36%, or some sort of wacky numbers like that. Oh, paper manipulation, people be saying, but that would make this go higher as well too. This can be something you can trade. For me, I'm thinking about, I knew I should have traded down here. I made a mistake in that. But I realize now that on a retest there, that's a spot where I do a small sell. And then as it's breaking this down to this level here, I would do an okay amount, like an intermediate level of selling. I'd be selling, of course, silver for gold. And I think this baby can go down possibly as low as 1, but good luck catching one if it gets there. That's the type of thinking that it could go. I mean, I'm not going to predict anything to be, I'm predicting it, but it might not happen on both directions, meaning it may never get close to 1 and it may go to 0.2. I don't think either one will, I think it's more likely to never get there than 0.2. But breaking down below 10, 7, 6, 4, aggressive selling silver for gold. And then if it goes, say for example, I get quote unquote lucky, It's just, I mean, look how bad it would have to get just to even get there. I mean, that would be sick. And that's how sick it would be to do it. So the market goes back down here. Let me just draw lines in. So there's 17 to 1. So at this stage, I would maybe do a little bit of selling. And then it goes back up. Oh, I could probably turn. And I mean, this is 23. I don't think it's going to happen this short. I think this is something that happened in like 5-6 years, but 10 years, which 2030 would get you to, but ultimate 10 years. And then from this point, it goes back down. Maybe I did. And then in here, it's like total aggressive selling. And then, okay, now because I probably have a fast chart, move back to the 17. Maybe go back down or congest there for a while, even go back higher again. And then maybe do something like this. And if the market can do any type of behavior like this, that would be, wow, that'd be fantastic for me and other people, but not for some people. It wouldn't be though. And in conclusion, I got on the quarterly time frame this chart called Trump, which is traded on FTX. Basically, it's a percentage Trump is going to be reelected, 40.3%, and it's been crashing lately. So ever since June, the whole month of June, the news on it is not so good. Now, back in 4 years ago, Donald Trump was like major big underdog to win. Nothing like this. This would be plus 150-ish kind of odds now. But he was like plus 600, plus 700, or 7-1 or something at big times, maybe even higher. I never bet it. And this, you can't, if you're an American, Canadian, European, you can't trade this or bet on this. They don't let you do it. Although there are places you could try to go do it, like betting sites and whatnot. But throwing that part aside, I mean, there's a decent chance I think he's going to win just because of, for this almost the similar reasons as before. I don't know what Cliff High of the Webbot was saying, but he actually was one of the reasons what he was, I mean, he was saying his reports, yeah, he's going to win. But here's the interesting thing about Cliff High of the Webbot. He has had a horrible track record of timing and a very good one of what happens. Oh, this is going to happen in this time frame. Then 4 years, 6 months this is going to happen. 6 years later it happens. And that's just consistent. Okay, 2 years later this happens, and it happens even later after that. But he nailed the timing of when Trump was going to win the election. That was just fantastic. Thank you for tuning in, and have yourself a great day. Bye-bye.